Hello everybody, welcome to another episode of Erickson TV. This is Curtis here. I wanted to talk a little bit about the 2012 tax law changes and limits for different types of deductions. And what I've done here on the board is I've shown different types of categories and then what the limits for deductions are for 2011 in the red. And then what I'm going to do for 2012 is write in the new limits for 2012. So the very first line is talking about 401k contribution limits, and these are for people that are either have their own company with a 401k plan or they're working for an employer that provides a 401k plan. And these are the amounts of elective annual limits that you can take as a pre-tax deduction for your paycheck. Okay. So the reason there's two numbers for 401ks is because the first line is for people that are under age 50, and your cap for 2011 was 16,500. That has changed, and it's now 17,000 for 2012. Okay, so what you want to do is make sure with your benefits department that if you want to maximize your 401k contribution, to make sure that these limits are adjusted for that. And then if you're 50 or over, you have a catch-up provision, and now you can do a maximum of 22,000, and this has changed to 22,500 for 2012. So again, check with your benefits department if you want to increase that limit. A lot of people I found working with tax clients are using the health savings accounts, HSA or health savings accounts, and so there's two numbers for 2011. This is the maximum pre-tax deduction that you can put into your health savings account. It's $3,050 if you have a single plan. If you have a family plan, it's $6,150. Okay. For 2012, if you're single, it's now $3,100, and for 2000, and then for a family, it is $6,250. So $3,100 and $6,250. The nice thing about these plans is that you can still make the contribution up till April 15th for this year, and take, if you haven't got this full amount in yet, and take a write-off for it. And of course, for this one, you can make up till April 15th of the following year. Okay. Last but not least, a very popular way of deducting vehicle expenses is taking the mileage rate. And so the reason I have two numbers here is, of course, the IRS makes things confusing. So they actually had two rates last year for 2011. For the first 6 months of the year, it was, and this is for business vehicle mileage, it was 51.5 cents for the first 6 months of the year through June 30th per business mile. And then from July 1st to the end of last year, it was 55.5 cents per mile. To make it a little simpler, for 2012, they just have one rate, and it's now 55.5 cents for the whole year of each business mile. I didn't write these down, but if you do mileage for charity, for 2011 it was 23.5 cents per mile. That's been lowered to 23 cents per mile. And then if you do medical miles, it's 14 cents per mile in 2011, and it's still 14 cents per mile in 2012. So those are some of the highlights that I see for the new tax law changes for 2012. If you have any specific questions, shoot me an email or give me a call, and we can talk about your situation. Have a great day. We'll see you next time on Erickson TV. Bye now.